Good day, Warriors. How you doing, Scott, Ingmar, AJ? How you doing, Bran? Hi, Ryan. Let's see, we have Steve is here. Astra FX. Okay. So dollars diverging, made a marginal new low. So let's take a look at that. And yen continues to push higher.
Not got your screen yet, mate.
Okay.
Oh, there we go.
There we go. All right. So yen looks like as this may have been US dollar yen, some type of breakout over 49. Ryan overcame this little double top.
Yeah. 49.20.
Yeah, and right in front of the Fed. And 10-year, I tell you what, they're stubborn, right? I mean, they keep projecting it, but they can't make any downside progress. So, to me, it looks like maybe the Fed's not going to give the market the Fed put it wants right now, and that he might be not real mean, but not real nice either. What do you think? Day away, is the market signaling something here?
I think today it might be signaling a bit of risk because all yen pairs are higher. We've got this Trump-Putin phone call, which could lead to a truce.
Okay.
So I think the market is maybe smelling a bit of risk on. And then for the euro, we got this German vote going on. So the euro faces sort of two potential positive risk headlines to get it rallying. But yeah, the yen is looking a bit risk on at the moment.
Risk on.
Yeah,
which started. Well, I guess you could say Friday, giving some of it back. But I would think that that's okay. To correct. Most people are saying 7.5. That's it. So I mean, the 38% retracement it almost got on this wave. Maybe we pull back and then make another run.
Deutsche Bank are expecting another 6% down.
Who is?
Deutsche Bank.
Oh, okay.
So given their record, they've probably nailed the bottom.
Yeah, or maybe it's later after we go here. So they're talking probably around what, 5,200?
Yeah, I haven't read the piece exactly, but
yeah,
6% is probably around that, isn't it?
All right, so I started buying the dollar, the Dixie yesterday. I don't be short. I don't think you could be short the dollar down here. I don't think tactically it makes any more sense than being short the S&P down here. So I'm looking for that rally in the dollar, continuation in yen, and I kind of think they want to squeeze people above 434. So we'll see. Will the market? So can the market continue a little bear market rally with higher yields? Because basically yields fell during most of the decline that we had. So if the yen could be risk on, could we have higher yields and the market still rally because they're not worried about a growth scare?
Yeah, absolutely.
Is that the kind of the scenario we could be in?
Yeah, absolutely. I think we could well be in that. If we get positive headlines, we get a truce. That's one step further to peace, and that's a big part of the risk picture at the moment. So yeah, you'll get the yields rallying, you get stocks rallying, particularly in Europe, and it's just whether US catches the same bug or not.
Okay. All right. So thank you, Ryan. Anything else that I didn't ask you that I should have?
Not that I can think of, mate.
Okay, bro.
Hey, real quick, I just want to ask. Hey, good morning, Dale. Did you guys talk about? And I wanted to just ask, or maybe enlighten us a little bit more about this UK situation and what's happening with Reeves and the budget right now.
Yeah, it's something I've been watching because I'm thinking. Sorry, not thinking. I am thinking that there's potential bad news coming next week. But it seems like Reeves has got over one hurdle. She was at odds with her cabinet, half the cabinet, over the measures she wants to push through, but they've just announced that the cabinet have at least agreed a package on welfare, which is one of the big topics here. So she's got over that hurdle. Now it just comes down to whether the market likes what she's selling next week. And I think there's a big risk that it doesn't. And that could be a big moment for the quid.
Okay. And who from the U.S. Just went over to meet the Prime Minister?
Was it Blake Morrow?
No, no, I don't think Blake went to see the British Prime Minister. He's too liberal for Blake.
I tell you what, Ryan, I prefer Vic Reeves being the chancellor than the current Reeves. This is an English comedian, very nice, very funny guy. Anyway,
make more sense.
Right. Well, Stell, take it away.
I'll take it away. Okay. Let me share my screen. Here we go. Okay. So we talked, well, you mentioned yields. We definitely need to be talking about them. You're right. We're bouncing, knocking our head towards this 435 level. It does look like some kind of a bearish flag, but I do not exclude the possibility that we go and do another nice little right shoulder here. My view remains that we're going to be lower in yields. Excuse me. And I've said that since quite a bit higher from here. But yes, we could edge back a little bit higher and then we fall. The question is, what happens to yields if we get some kind of truce, some kind of resolve, well, temporary resolving of the situation in Ukraine? Because there's, you can make arguments for both sides. Yield go up, yield go down. But I don't know what your guys' opinions are on that, but I think that we will be heading lower. And I think that inflation, if you look at true inflation, it's showing that it's 1.5% in the US. So it's quite a bit away from CPI, the official CPI, and core PCE. But I think if inflation is going to be subsiding, I do think that oil is going to be dropping below support. I know it's higher today, but it's quite volatile on a day-to-day basis. And I think this will bring deflationary or disinflationary pressures. So that's my view on yields. The other very interesting one is the dollar. And you look at the Dixie. I mean, this looks doesn't look healthy at all. Again, this looks like some kind of a bearish wedge or flag, however you want to call it. Do I think we can bounce? Of course, I think we can, but I think we will be testing this 101 area. After that, all bets are off. I don't know what's going to happen, but I think that the sentiment is still quite bearish. And given what the Trump administration is doing and the general uncertainty, then I don't see why we cannot move lower in the dollar. And it's something that Donald Trump wants. And Besant, and they've been talking about that, and they want to have a weaker dollar so that they can export better, etc., etc. So my view remains on both yields and dollar. I do think they're going lower, but of course we cannot rule out a little surge higher first.
Yeah, you have a vibe on the Fed at all still?
What they're going to do this week, you mean?
Yeah. Yeah.
Well, I don't think they're doing it. They're moving rates. We're pricing nothing, right? So, but the question is, what kind of
pressure
forward guidance? Yes, exactly. It's a good question. I don't see any reasons for them to be hawkish. That's the problem. Other than the official, CPI and core PCE being sticky, but it's been sticky for a while. I don't see anything new, and the way equity markets have been trading, I don't see what's going to make them more hawkish than they were, say, last time. So I think the risk, if they do something, is that they do sound a little bit on the dovish side.
Yeah, give the market Fed put for a little while.
For a little while, yeah. They know what's going to. Yeah. They know what the effect is going to have on equity markets. And you remember, Donald Trump always used the stock market as his gauge for success last term. Well, this time he's not really mentioning it. So
yeah, he almost prepped people for the decline. He said there would be a little pain.
Short-term pain. Yes.
And he's saying, I'm not watching the market, which means he is watching the market, but the market's doing exactly what he wants so they could get yields down.
And he's right.
They need a recession.
Yeah, and Besant said the other day on an interview, uh, it's good to have pullbacks. They're healthy. The unhealthy thing is a 45-degree angle where we keep going higher because then the crash is going to be bigger. So they like that. They're on board. But of course, people who see their 401ks and their equity holdings drop, they don't like that. But it is what it is. The S&P 500 index is the very interesting level. Remember, we were talking about 5670-ish for a while, and I always said, yes, we broke below this channel, but 5670 is the point below which I get bearish. Well, we broke below, and now we're retesting. I think this is a really clear short
Right.
level here, or the next 10 points, let's say. Of course, you know where you're wrong. You're above, 5700 and above, you're wrong. Because it did, it broke below, came up, broke up above, just to take some shorts out, and now it's back below. I think this is a really clean setup. If anybody has the inkling to go short, I don't think it's a bad setup here. So, probabilities are good.
Okay. I think you were talking about that late last week or something,
Yes.
or
Yes.
okay, that you wanted to sell a test of that breakdown.
Yes, so I think this breakdown and retest is not bad. Actually, I'm probably going to be, if we touch 5670, I'm going to sell some there, but with a tight stop, 30 points above, and if it works out, great. If not, we move to the next one. We have to talk about gold, silver. Gold all-time highs, touching this trend line now. Yes, only 2 touches. This is the third one, but still, it is there, and it's looking supreme. And I always try to find reasons to be bearish or not to be bullish gold and silver, and there are very few and far between. The rise in yields was one where I said, I think we should be a little bit cautious, but if you scroll back, you see how well gold traded during that period, that the breakout was almost inevitable, and it's happened. And would I stand in front of this? Of course not. DSI is high; it's in the 80s if I recall. So sentiment is very bullish. You see all these banks predicting now 4,000 and whatever. So when that gets a little bit too much, you have to be careful and you unwind. I don't see any reason to go against this. Silver is also looking good now. I still have, remember, 2 positions, my core from 2310 and another from 3242.
I
More
own
recent,
it from 21 physical.
nice, very nice. I mean,
Want my address?
don't tell anybody.
Oh, and your platinum trade is looking better.
Platinum is looking better. Let's. I just want to say 2 things for silver. One, the next level is 3485. I think those highs, and then after that, it's anybody's guess.
Well, draw a line off the previous 2 highs, and that's where it could go. But I've heard targets 3590. I've been talking. I did get an interesting piece of information I'll share with metalheads. Check
Okay.
out the COT report on silver, and you'll see what the commercials are doing compared to large specs, and they're both
Okay.
at extremes. But I
Okay.
still think price will go to that finish a third drive up there somewhere.
Yeah. Yeah. And there will be a pullback after that, but for now,
What I'm wondering, what could generate a pullback, and the only thing I could come up with is, I can't see the dollar being part of it. I think it would have to be another bout of risk off. It's all I
yeah.
could come up with.
Yeah, the problem is with risk off, yields are going to drop, and so it's kind of, I don't know. You're right.
What
Risk off.
what would ever take gold lower? Can you come up with a bearish argument for
I, I,
gold?
I
You're in
think
there too, Ryan.
I think
Blake.
higher yields is the one
That's
thing
it.
that's going to bring them. That's the only thing that I can think of because that's the immediate reaction of the markets. The yields go up, metals
Okay.
get sold. Um, you talk about platinum. Platinum is also looking good. I am still long that, and we're getting close to breakout point. So.
You copied
Um,
Shy Girl. She copied you. I'm
I don't know.
kidding.
Um,
Everyone who's long platinum copied each other. All
well, I
right.
have the
So,
macro
and you
thesis as well. I've talked
yeah.
about that before. But anyway, so
Yeah.
that's my main view of things. Currency wise, I don't see anything new to talk about. Euro pound was nice. Remember, we were talking about this when it reached this support zone here in the 82s, and I
Yeah.
was saying this is a very nice place to play a bounce because
Yeah.
you know where you're wrong and it was close. Well, it's bounced very well. The problem is that both the Eurozone and the UK, I think, are in lots of trouble. So I don't know which one to prefer. But this one is playing out, and next level is around 85. So if you've been long that, I think 85 is a place to be unwinding some. And lastly, cryptos looked like they were going to do well yesterday, but yeah, giving it all back today, and I really don't know what to do with these. Um, Very difficult. Bitcoin is still holding above this zone here, which is 73-ish. Michael Saylor keeps buying. I think his average now is 68K or something like that, and he's a big whale. I was reading that 30% of or around 30% of last year's Bitcoin purchases were all by MicroStrategy. So that tells you there's a big player who, if they need to unwind, look out. Ethereum is looking worse. It's broken down. I mean, I wouldn't touch these. I really wouldn't. Not at the moment.
Can't touch this.
Da, 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 da. Yeah.
All right. All right. So let's
Enough
see
from
who's
me.
left on the bench.
You got Grega here.
Oh my God! What a
I know you got a full house today.
Take me out to the ball game. You know, we got Grega here. All right. Let's bring in the wizard. It's your charts, man.
Let's bring in Luca.
Yeah. Have your son do the presentation. Grega? There it is.
There it is.
Okay.
So basically, we haven't seen dollar moving, or at least euro going far since last time when we spoke. And I still think that the main driver for potential turn to the even lower levels on dollar would be when we finally see the US treasuries coming higher. I still think that we will keep making higher swing lows here, and that US yields will remain under pressure. But of course, market is just now slowing down ahead of Fed meetings and decision tomorrow. So I think there is a chance, at least from a technical perspective, that this is a minor correction that will be resolved to the upside. So I'm wondering if the euro dollar, based on what is happening with these votes in Germany, maybe the euro dollar could still retest the lower range of this fourth wave consolidation.
Where is that? 7.5 about?
Yeah, like last time we discussed around 108, and we got the pullback towards 102.20 or so, but notice that that was a very small compared to this wave 2 of the same degree.
Right.
And we just basically spiked once again into this 109.50 levels. And because we cannot really progress to the upside since this morning, I just think that basically we are still neutral here, and I don't think we will get any kind of a real moves just yet. It could be just another failure move if we get any reaction from Germany.
Would that equate to about 104 in the Dixie? This kind of move.
You mean support and resistance levels? Yeah, I mean 104 definitely is the important one.
Okay.
Even if you go a little bit back here. But the idea is that this wave 4 for me is just not enough long in time, not even in price, to say it's finished. But I definitely expect that if we get some bit of more neutral or sideways price action here, that maybe in the second half of this week, maybe Thursday, Friday, we could start seeing a push to the downside. Also, as you know, since dollar index broke below 106, I am comparing and looking what are the most stronger pairs here, and we can basically see that euro, which we know was outperforming here recently, and the Mexican peso, but now even Kiwi and Aussie are trying to catch a bit here. So I'm thinking that basically since last week, Friday, when stocks stabilized, and dollar now keeps moving lower, I think that now when stocks are holding support, it's worth to watch commodity currencies. And I think that they could have much more upside potential. I think that, for example, pound, which was doing quite well weeks back, is now also could be slowing down. Also, we have bank decision in UK on this Thursday, if I'm not wrong. So maybe this one will slow down a bit, and that's why maybe there will be some shifts toward commodity currencies. And I really like how Kiwi and Mexican peso are trading at the moment. Looking at Kiwi, as you know, we have, looking at Mexican peso, it came out of this wedge pattern and broke quite decisively below this 20 figure. So I'm thinking that more weakness should be in the cards. Normally this pattern can even take us back to the starting point of this pattern, which is, as you know, around 19 down there. So I think that after rallies, we could see even more weakness here.
Where are you at on the yen, Grega?
Yeah, I mean, dollar yen, I have it here. Okay, so dollar yen is, for me, I'm expecting that BOG will possibly be somehow hawkish. I don't see them being dovish, and I also realize that lower US yields will possibly make this pair even, it will cause even further downside here. So what I'm looking at is still WXY formation. Notice that we have only a free wave rise from the most recent lows, and if we go to the smaller time frame, okay, I think that this levels around 150 is a pretty strong resistance. So for now, what I see, actually, because the market is on the rise since Monday open, I just don't believe that this will be one straight move to the upside for the whole week. I believe that there will be some reversals, and maybe this reversal will occur tomorrow. I think that we have tomorrow morning the BOG. So I think that there can be a pretty nice resistance up there. Timing is actually perfect, especially with Fed also on the schedule tomorrow.
How about one more of the potpourri, and tell us where you're at on SPX with a short-term low being put in late last week. Well, a low. I don't know if it's short-term.
Let me check where I have this one.
Oh, I like that Bitcoin.
Here's basically...
Okay.
I don't hear you well. Maybe it's only me.
Can you hear me?
Yeah, no, it's better.
Okay.
Okay. So you asked for the SPX, right?
Yeah.
Yeah. Basically, notice that we had a pretty nice recovery from last Thursday, and this looks like it's made by 5 waves, right? So I'm thinking about more upside. Could be still just another higher degree fourth wave consolidation before we get the final push to the downside. But even if this is a wave 4 and a corrective flag, it should be structured by ABC lags. So in my opinion, there is a chance that this market will, after the current pullback, that will stabilize somewhere around 5,650. This is what I'm watching for myself as well. I think that it's pretty interesting levels, and like we said earlier that Stelio said earlier that he does not see how Powell would be hawkish, so that's why we also think that overall views could potentially, and decisions could potentially leave the stock market even higher. So if we get some pullbacks here, it could be quite interesting for a bounce, in my opinion.
What would you look for a quality for C? Called the move we had from Thursday, A, pullback, B. You have it labeled that way, but if we had a, do you look for a quality?
Yeah,
or could
always.
it be less, or could it be less than what A was?
Well, usually I'm targeting for equality because that's my
default
the most
position.
appropriate objective target. But definitely the 61.8% could be enough, especially when wave B is not that deep. But I would watch these levels. I'm not really sure what happened back here. It was on March 7th, but notice that we have and this gap then on, actually what is gap as I see on Sunday and Monday open. Actually, it's a gap which could be the perfect interesting levels if we see a bit more upside here after this wave B setback. So I would be targeting these levels around 5,820.
Thank you, Grega.
Thank you.
Anything else? That's it.
Yeah, gold is bullish. That's it.
It's in wave Z. Is it a Z wave?
It's 12 drives to the top.
Hey man, I've traded 100 drives to the top, and my account can prove it. So anyway,
hey, Coach. I
yeah,
know we got just a few minutes, but we got Canadian CPI coming out.
okay,
So I just wanted to just take over for a few
go
minutes
ahead.
and just discuss a couple of things. You know, yesterday we were, you know, on the show, I was talking about the euro yen. It actually and being short, it broke out yesterday, and I had to close it out for a loss. But look at how big of a breakout this is. And you know, the euro yen, I mean, we broke above the 200 DMA yesterday, and it's still extending its gains. And with this, we do have a German vote today on the spending package. Ryan, do you know what time that's coming out today?
It's going to start in around half an hour, but there's loads of amendments to be voted on and speaking and whatnot. So it starts from the top of the next hour.
It's expected to pass, and I mean, I've got to assume that it's already in the price, but that doesn't mean that the euro can't extend gains. You just have to be careful because that's a bit of a risk situation as we go into the next couple hours. Thank you, Ryan. But yeah, I mean, you're looking at the euro yen and even the yen. I mean, it looks like the dollar yen. I know the BOJ is tonight, even though I say tonight, it's tomorrow morning, but it is later tonight for me and for most of us listening in right now. The dollar yen's getting really close to this resistance around the 150 and a quarter level. That's the level I'm going to be looking at. It's only 50 pips higher than where we're at right now. It's going to be kind of a big pivot for the market, I think, ahead of the BOJ tonight. So just a little bit of heads up if you're still playing in that arena. Like I said, the euro yen it started to break out yesterday, and you know, I got stopped out. I'm like, all right, well, I'm done with that. And I don't mind revisiting it, but I want to get past the BOJ tonight. We do have the Canadian CPI that's coming out right now, and you know, I think one of the reasons why the Canadian dollar has been a little firmer overall is just Trudeau's gone. I mean, that's, you know, plain and simple. Justin Trudeau is not in the picture anymore. And so with Mark Carney at the helm right now, at least near term, the Canadian dollar has gotten a little bit of a lift. But we're what I think is at pretty important support. I bought the dollar Canadian yesterday at this triangle support, played it a little bit to the upside, and I got out of it last night. But you know, we do have Canadian CPI, so if we take out, if the data is strong, excuse me, and we start taking out this 142 60 level, I mean, that might open up a little bit of downside, especially with Bessen's comments a little earlier, talking about not all tariffs are going to be equal, and some countries are going to get away with, you know, with less and more, and some of those headlines a little bit earlier. I think that, you know, might allow the Canadian to actually rally a little bit. So I'm going to be watching this one rather carefully. Ryan, do you have any views on the Canadian? I know you've been following it fairly carefully, fairly closely as of late, as I just get us ready for this data.
Yeah, not much to add to what you're saying. The Carney effect. He's spoken out of both sides of his mouth. He said he's going to fight tariffs with tariffs, but he's also happy to sit down. I think we're in that period where nothing much is going to happen until we get to a week before the next deadline, i.e. next week, and it'll all ramp up again.
Yeah, right. Don't forget, April 2nd is like another big, yeah, and as Ryan's pointing out, is next week, which is going to be key. Steve, I know you haven't had a chance to say anything this morning. Oh, did he already leave? Dang, he already left.
Yeah, he left.
Oh, dang, we didn't get to bring him in. Anyway, I'll talk. That's okay. For those of you that want to hear from Steve, he is on the morning edge in about 45 minutes from now. So don't worry about that. Grega, any last minute thoughts? Any thoughts on the Canadian before the Canadian CPI comes out?
Well, I mean, at least from a technical perspective, if dollar would turn significantly to the upside, I immediately know what I would be trading. I would most likely be looking for opportunities on dollar CAD.
Okay, so you're looking at this. You're looking at this same triangle pattern, and you guys can see Grega's work right on Forex Analytix. Do you just go to Elliott Wave right here?
That's interesting.
Yeah, we are very key support, but this range could resume. So even if we see just a temporary bounce, it maybe could be enough for some to make some money.
Yeah, like I said, I was playing it with you, really to the long side down here. Oh, I was playing off, all of these levels as well. That would give me more confidence if we did break out above 143.10. But hey, the data's coming out here in 1 second. Here we go. Canadian CPI hot.
Oh, wow.
Hot. Yeah, you can see that is probing that support right now with the dollar CAD. That's giving the Canadian dollar some
2.6 year on year. I mean, that's
hot.
Big jump.
Does that mean Carney's going to ease? I'm kidding.
That's what he knows how to do, right?
That is all he knows how to do.
One trick pony.
With all of his other
has he ever raised
bank...
rates? Has he ever raised rates in his central bank careers in how many countries? Just two countries, right?
Yeah, just the Bank of England and Bank of Canada. Yeah.
Yeah. Okay. All right. So you're getting that reversal. That I found it very interesting to get that flash of Grega's view on the loonie. You know how it is really such a nice advantage that if I'm looking around for things for me to come to the site here and take a look at what all the guys are doing, what they're seeing, and I end up noticing things that I hadn't even thought about before, that at times has kept me out of trouble and pointed me in the right direction. So I work here, so I get it for free. But but you know what? If I didn't work here, and I wasn't willing to pay for it, I'd miss it. Okay, so I think it's an edge. So if you can't find your edge on your own, maybe you could find your edge in a community. Sometimes other people's edge might rub off on you and maybe to your liking and suit your personality. So you got to be in a community during this historic period that we're in. Don't isolate.
100%.
Okay, man. So I've been trying to promote Daniel, but people just don't want to be promoted anymore.
So Daniel, you have to accept the invitation from Dale. And before I let everybody, before I let you take over with Daniel, I just want to say, guys, as Dale's saying, it's $1 for 10 days to jump in our community. Like if you wanted to, know how I was managing the euro yen yesterday, or if you wanted to, know that I just shorted sterling earlier for a double top, and close that one out just to, before we started the show. And know what Ryan's doing with his Aussie New Zealand, jump in here to the Forex Analytics chat room. We're traders. We have and I should mention this really quick. We're traders, and we get things right, we get things wrong, but we're all in the chat and the trades room marking up what we're doing. Last night, I was with my I was at a St. Patrick's Day party. You guys are gonna find this kind of entertaining. I was at a St. Patrick's Day party. So my son's girlfriend, her dad was the head trader, FX trader at Morgan Stanley for 20 years, and he also traded. When I was trading for Gelos, he was trading for the Gelber Group. Ryan, Dale, Stelios, you guys probably all remember the Gelber Group, where we helped, Brian Gelber, who's in the, Market Wizards book. The Gelber Group's been around for 25 years, and he traded with those guys at the Gelber Group. So we're texting Tommy Peltier, which you guys might have remembered, who trades. He's been trading with them for 18 years. We texted him last night a selfie, and he's like, he's looking at his wife. He's like, oh, hey, Sue, Blake knows TP. And I'm like, oh yeah. Next thing you know, it's an amazing community of traders that are involved, not only in the Forex Analytics community, but we have a lot of people that we know all around the world and people that we've all been trading together with for a couple of decades. So you want to jump in a community like ours where you can actually be involved with other people and have connections in different places. So
and
anyway,
if you're
I'm going to
like
let
me
you.
and you can't jump like Blake still believes he can,
Ah.
you could just stroll right into the room.
There you go.
All
You
right?
can stroll right into the room. All right, Dale. Hey, have a great interview with Daniel.
All right,
Thanks,
buddy.
old school guys, Grega, Ryan, Stelios, for being here today and updating us. And as Ryan said, keep an eye on this sterling. I think it's going to be a currency playing over the course of the next 24 hours. So, all right, guys. Thanks.
Thank you, Dream Team. Thank you, Grega.
Cheers, Dale.
Ryan, Stel,
Cheers,
Blake.
mate.
Good show today, bro. All of you guys. Thank you very much. And now we have Daniel Hussey up with us. And Daniel, good to see you again. And I noticed on your tweet you wanted to address some of the metals that were not performing as well as gold. I know we'll probably talk about the elephant in the room, and that's what's happened to equities in the last month or so. So,
Sure.
what's top of mind for you? You call it. You're the boss.
I think, hey, why don't we, take a look at gold while we're talking about elephants in the room. I know, one of your prior guests there, our chart analyst was talking about, the needs for rate rising here in that environment that could put a little bit of weight on the shoulder for the gold. And I think that that's probably the biggest wet blanket that could be thrown on this rally for precious metals right now. Is all of a sudden the US dollar, re-upping its rate rising environment. And let's be frank, since 2012, since the Fed started to taper their quantitative easing efforts and actually, take rates off of rock bottom and what were effectively negative, we've been in, a decade cycle now of rate rising. And it's interesting to see now this far into it, gold and silver coming back as better plays, so far to end the year 2024 and into 2025 so far. So
Yeah.
let's see here. Why not talk?
Relentless. It's been
Yeah,
relentless and
it really has. And let's see here. If I share
very
my
shallow
screen,
corrections, never giving people a good break to get in, just small little consolidations.
absolutely. And I think it's
So,
probably a good idea to just take a quick look at the dollar index, to give
yeah.
people that bigger perspective that we sometimes don't focus in on all the time. Um, get caught too much maybe in an individual cross or something. But, okay, the dollar index is arguably mostly euro dollar denominated, but it still gives us a good clear trend from 2029, the end of the last major recession, or
Yeah.
2009, excuse me.
Yeah.
Then that 2012 period where interest rates started to effectively go back up. We didn't have a positive interest rate yet, but the Fed had started to remove quantitative easing. The taper began, and the US dollar began generally an uptrend for the next decade, while interest rates were on for the proverbial rise. And we kind of saw a crescendo of that here into and through the 2020 through 2025 period. But you can see every 5-10 years, there's these big old ranges the market sets up in. Last one from about 90 through to 103. That was your old kind of dollar strength from interest rates actually entering, a rising environment. And then now, the US dollar has found itself potentially in this 100 to 115 range. And we're very comfortable, I think, in that range. The last, they're part of a year and a half now, the dollar index has been unable to break below that fabled 100 figure. And yet you have gold pushing to all-time highs. Not to say that there's a direct inverse correlation between the dollar and gold, but if you look at the correlation between the dollar, via maybe the yen and the 10-year, and then also the 30-year to gold, there's some strong correlations there still across those bigger asset classes that we can pay attention to. But the dollar having coming off of that high and back down into this old range breaks at least the technical picture of us screaming, all the way back up to 115 for the time being. But the major question of do we stick above that 100 figure in the dollar
if you
index?
look left, Daniel, all the way back to the 22, the first high at 181, what was it, 115?
on
to
this
100.
weekly chart.
All right, so that was 1,500 points, right?
Right.
So if that was I don't know, an A or a 1, and then we peaked up here around 110 and we had equality, that would give you 95.
There you go. And that comes in right around that very large upward sloping trend line that we've been holding during this entire period. So interesting to see, right? A nice little price measurement, 100% down if you measure this
equality,
a B wave up and you get that equality move down into that trend line. I couldn't disagree with the longer term picture that, hey, if the dollar does head down, if we break below 100, 95 to 90, that 96, 95 area seems like the next area of logical support for this market and let's also consider the old range we were in. That's about 50% of your old range as well. Just an interesting area that may have some attachment from the old the old range as well to it.
The market's memory is left.
Right. For the time being, we're kind of holding above those old. Oh,
no, you said right. So
I
said left.
I got you.
I know it's early, Daniel, but it's later
the
there.
bell hasn't even rung. No, and I've got I got two young ones with with norovirus right now, so we're just having a ball in the Hussey household.
I hear owls outside.
But anyway. Okay, so dollar could be correcting against a longer term pattern here, right? Is what we're kind of coming to a conclusion on where we're at in that dollar chart. So, okay, if the dollar's coming down, that could be, a period, for the things like the 10-year. Let me flip over to this other chart, which has overlaid with it the Japanese yen futures.
So you still believe in the correlation between the yen and yields?
These are very long-term
correlations.
Correlations, thank you, and chart right. Long-term correlations, and they're quite incredibly tight. Can you guys see now? See the 10-year? Can't tell from Zoom. Did say to shift.
And the green is what? The yen?
Yeah, the blue here overlaid is the 10-year note, or excuse me, the yen.
Okay.
Overlaid to the 10-year. And we seem to be running up into and while let me bring up a daily chart here. A little more time frame on it. There we go.
Okay.
All right, so we had ourselves in a bit of a correction, and in this kind of what I would call a bear flag on the daily chart. You could correlate that with the alongside the yen as well. If we look at the dollar yen itself, we've had a very good run up over the last several years, and now are starting to find resistance in this 150 to 160 area in the dollar yen. And if you look at a chart of the dollar yen that goes back even further, you're going to see that, which I don't unfortunately have the all of it here. Historically, the dollar yen began trading at around 350 back in the 70s. It fell all the way to a low of 75. Well, running up into the 160 to 180 area is effectively a 50% retracement of the entire lifetime of the dollar yen's existence, or at least its ability to float as a currency after World War II. We're finding resistance up into this area. All I wanted to point out was this big old range that we've been in between 140 and 160 in the dollar yen, which is high, which has a correlation here between the 10-year note between the 105 to 115 handle as well. Because what we've got here is the 6J, which is just the upside down dollar yen. It's in the futures. It's denominated in US dollars rather than in yen, for those that are familiar with our FX crosses. But there's a pretty good long-term correlation here between the two asset classes, which means, hey, that's where we're really driving and where the rubber hits the road for where interest rates gets translated into US dollars or vice versa. And the carry trade with the yen is a big factor in that. So that's the reason there's an existence of correlation here.
I want to ask you about the carry trade being a big factor. So we've had a pretty good break from recent highs.
Yep.
What were they, 58? And I guess you could say that it has had some effect on risk, but no one talked about that as being part
Certainly.
of the risk. So is there an unwind 2.0 that people will point to, another unwind of the carry trade, or did they have enough time on this rally to 58 to repair their positions and not be as heavily in the carry?
Yeah, that's a really good question. And that's where, if we take a hard look at some of the commitment to traders reports, we can see, how some of those commercial or more financial interested groups may be trading. I haven't taken a deep dive into it just myself. I've been kind of focused on grains here as we've unwound, kind of done that in the row crops and in grains actually as well. This high interest rate environment has caused people to kind of unwind their carry. And in that sense, it's literally just grain being carried and stored in a silo. Here we're talking about dollars stored in bonds. And with higher interest rates like we have in the US, there's going to be that strong demand. And I think that's why when you look at a chart of the dollar index, we're not down to 100 yet still, right? Where there's still demand for dollars out there because of that high aggressive interest rate that the US has had. If we were to unwind interest rates and they were to, the 10-year chart here going up is interest rates going down effectively. So if we were to go back up to that 122 to 125 area, really unwind this big, rally in interest rates we've had since COVID, that would cause a much, larger downturn in that dollar yen. I think that's what could also cause the dollar to maybe break below the 100 figure. And I'm just trying to point out to people, hey, this 115 handle in the 10-year, this 70 or 7 handle in the dollar yen, and in the yen dollar, the Japanese futures. And what I would look at on the chart of the actual dollar yen is maybe this 140 figure. So long as we're staying above those levels, or below those levels for the 10-year, there's probably going to be some more pressure on the dollar, or at least until, or support on the dollar until we really get below those levels. Once we do, though, I think that's going to correlate with that break to 95 we talked about earlier, and you're going to probably see a rally in the 10-year back to 115 to 120. That would correlate with a break in the dollar yen below 140, and a bigger, deeper correction and a little more unwinding of that, because arguably the market needs to move. It's been sitting in this range for too long. It needs to go above or below these thresholds. And we could see, a proponent of that happen. And that kind of brings us to gold and silver, where there is a correlation between effectively the 30-year note, which is this blue line, and gold, which we have a 4-hour chart up. We look at a daily chart, you can see where this correlation sticks and where it breaks. We went through a period coming into this year where it was pretty strong. It had broken for a period, and now it's starting to come back as gold's making new all-time highs. And I feel there's maybe a narrative and a story there. Okay. So it's not as tight and as glorious of a correlation between the 30-year and gold as maybe the yen and the dollar. But there is still a correlation here that you're starting to see a bit of a divergence from, or we had a divergence from here into the end of the year, and now you're starting to see it come back a little bit. And so I'm curious to see if if gold isn't a precursor and maybe a fear of a lower interest rate or rate dropping environment, a risk off environment coming in the future, is because of the break of the correlation that we're starting to see here over the last couple of weeks. Gold starting to run higher, which ultimately could that drag 30-year and the bond markets higher as well. And, I'm trying to build a case for lower rates, higher gold, and maybe a little bit more of I don't want to say quantitative easing, but in a period of easing in the rate markets that could help with the risk off that we're seeing and the volatility we're seeing in the stock market as well.
All right. So is this correction? Do you think this correction's over in SPX?
Let's take a look at it, because my long-term charts, which we've looked at here in the past, everyone can see. I hope everyone can see the chart of the SPX here. to give you guys all a rundown of kind of the big long-term weekly chart and monthly chart I track. I should prefer this to be monthly for this discussion. Okay. Coming out of World War II, had a nice big period of a bull market. Back in the 70s, we had a bit of a recession. Market fell from 120 down to 60, basically a 50% pullback. We rallied for the next, 20, 30 years. Into the 80s, we had Black Monday, a big correction down from highs of 340 down to a low of around 220, and then subsequently rallied thereafter. I put us in about 1994 in terms of the longer, the run up from our past recession in the 70s. I think we're about 94, somewhere in this corrective period. Saw significant dips, 50-point dips in the stock market, or 20, 30-point dip in the stock market. Remember, the S&P 500 back then was, a sub 500 point asset, a little different when we've tagged on a multiple 10. So a big expansionary risk on period into the dot-com bubble. And then we had our next major recessionary period that ended in culmination in 2009. Fell from highs of 1,600, unlike 160 in the 70s, down to 70s and 50% pullback. Market then rallied. We had our Black Monday, Millennial Black Monday, as I like to call it, event in 2020, excuse me. And then we subsequently rallied up to new all-time highs. 2024, 2025 to me look a lot like 1994 on that old chart. You had your first major correction, basically 2.5 years after that Millennial Black Monday low, just like you had your first major correction, basically 2.5 years after Monday. The market found support.
What was that, 20% from the high?
Yeah, right. I mean,
was that a 20% correction?
It'd be a drop from 360 down to 300. So yeah, a 20% correction off the highs there.
Okay, so if we got 20% in the S&Ps, you're talking about 4,800, which is my target.
Yes. Well, yeah, and that would be also holding above that old high that we held there in 2022.
That was a breakout at 4,800.
Right. And then that's absolutely right. That 4,800 breakout. It's absolutely right. And holding up there. I mean, I'm not saying that we're going to get a big run up. If you can see from this blue circle on the chart in the early 90s through the 2000s, we had the biggest expansionary period of the market of all time. It went up 4x. We went from a 300, trading from 300 up to 1,200. I'm not necessarily saying we're going to go from 3,000 up to 12,000 over this next period, but that is how you kind of have to think about the long-term perspective of the stock market. It is what it did in the past. Does that mean it's going to happen in the future? No. But this correlation between recession, the bull market, or the wall of worry that the bull market climbs, manufactured recession is what I like to call COVID, and then Millennium and Black Monday in the 80s.
Well, maybe you could say
following
this is
very similar patterns, right?
Maybe this is manufactured, this recession we're going to have.
Or
at
wonder, right?
At least speed it up to happen quicker.
Well, the dollar's been falling. The bond market looks like it wants to pop a little bit. Gold's rallying. I mean, all the stars are aligning. That's all I'm saying, right? The pullback that in the period of volatility that we have on the chart, though, the question you answered me was, are we done? Is it over yet? Yeah. Not in my opinion. If you go back to let's look at 1994 again. The initial drop off of the highs lasted, we didn't take out that old high until April of the following year. So we could have an entire year worth. This pullback was in 480 down to 440. So not quite 20, 10%. But about a 10% pullback.
That's what we've had already. Yeah.
And all we know for certain is that, hey, there's a period or was it on the chart? Here it is. That's correlating, a period of correction or consolidation. This consolidation could have been different. It could have ended up being a steeper three-wave move before a rally up. That wouldn't have changed a whole lot, right? If we went down to 400 here on the chart versus, just the 430 low, right? And made it an actual 20% pullback. That wouldn't have changed your narrative
trend.
fits here, right? The idea is that we've had a period of trend. Now we're having a period of consolidation and volatility. We had a period of trend. Now we're having a period of consolidation and volatility. That's all, this longer term chart I would chew into. I wouldn't say, oh, only a 10% correction, All
right, we have about 5 minutes. Let's get to your wheelhouse and talk about the grains in light of tariffs.
Sure. Grains in light of tariffs, boy, we have seen it's been honestly a headline driven market that not many know how to really sink our teeth into it, because every day something changes, right? I've got up some continuous charts though of soybeans real quick. Regardless of tariff talks, I always find that's what's driving the very short term up and down. We have had a lot of sideways consolidation in the grains. I'm still cautiously optimistic because I believe the first go round we hit an understanding with our trade partners in agriculture, and we're able to meet all of our export demand. That's the big question here, folks, is that will countries like China that take such a massive amount of and Europe too now, that take such a massive amount of our row crop production, will they continue to be buyers and drive up that demand? And that's a big reason why over the last several weeks we've had a bit of a downturn on the charts, is because there's fear that, hey, with this extra tax, there's going to be less demand when there's other products. That's absolutely right, Dale.
They'll go to Brazil for beans, right?
That's absolutely right.
They're doing. Yeah.
And what I want to point out to folks, though, is that, hey, on the much longer term charts, at least, I see reasons to, my lines aren't wanting to work very well for me. I see reasons to be still long-term bullish and say, hey, there's value down at these levels because, hey, since the 2000s, we've had this upward sloping trend line that has continued. And this is how grains trade. There's a feast and famine cycle to grains. There's periods of low supply, high demand, and there's periods of high supply, low demand. And we seem to find these floors in price, but it never will go too much too much lower, whatever. We've got May corn up here, big trend line against the lows. This big trend line, in my opinion, kind of harbors the idea that inflation is taking root over the last 20 years, prices inflating slowly over time, and that's driven by things like ethanol demand. So we're looking in the row crops for reasons to be more domestically dependent on our production and less dependent on foreign exports, so that things like tariffs don't have too much impact on the trade.
Always, but with La Nina, isn't the growing season really the critical plantings going okay? But the near harvest, or like August, things could start withering out there if this drought spreads to the breadbasket, like
Absolutely.
It is out here.
So, right. So we're going into plantings right now. For those that are unaware, farming is a cyclical trade. We harvest everything in the fall in the northern hemisphere. So all of US, Canada, Mexico, we're all harvesting our crop at the same time every year. But we're also planting it and starting to do that field work now in late March, early April, where the seed's actually going into the ground.
Are you out there?
Has already told us. I'm not out there. We do get boots on the ground, and we do what's called a crop tour to go around and see how at various points throughout the year the crop is actually producing, right? And you can tell it's a plant. It's a 3-month long chemical process of a plant going from seed to creating seeds. And we harvest them. And you can tell when plants are doing well or not, and get a kind of a good barometer of how that production is going to be, because we have such a rigid, what's referred to as balance sheet in the row crops. We can tell down to almost the exact kernel how much we produce. So the supply and demand estimate can become very well known, which is a good or bad thing for price. Hence, very big swings very quickly.
Look at that trend line on the beans. That's beauty. That's a beauty.
And it's the same idea.
And we have we have our second higher low developing right here too. By the
Correct.
beans.
And we're right back down into the area. And I wouldn't say, just
beans in the 40s.
2 hands. We'd love to see it. And I think there'd be a lot of farms.
There'd be a lot of lot of people not eating as much tofu.
Yeah, and we need we will probably see that kind of demand too, because we didn't touch too much on cattle prices, but boy, cattle prices have been skyrocketing. Probably going to see more animals on feed. You're going to see more demand. I think there's a good picture out there once we get through the turbulence of tariff talks. Once we
Okay.
know what those balance sheets are going to say in terms of export demand, and we don't have to worry too much, I think the bottom will be in, and we'll see a bit of a rally here this year.
All
But
right,
we're waiting for that news.
One quick look at wheat long term.
Wheat, similar idea, except it kind of
Not
plays
as
around.
strong. Yeah.
It's there. It's there.
Yeah,
That trend line against
it's
the
a
lows is
sleeper.
there.
Yeah.
It's just it tends to be a little bit shallower. And the reason because is, these big run-ups due to war and other reasons that wheat can go to, double and triple in value, they build up. And there was a crescendo to the Ukrainian conflict and the war with Russia, which is the big reason why wheat hit $14. But as you can see, that fear in the wheat of the world has subsided. So we're probably down to the value area for wheat as well. Yeah, you want to accumulate long-term stockpile of wheat, great time to do it. But otherwise, we need to see wheat back above $6 to start getting excited again.
Okay, I'm already
it's something that I think
excited.
could happen.
I'm building a silo in my backyard, and I want to be like Joseph in the Bible and be able to share it with people when they get hungry. And everyone who's just listened to Daniel for 30 minutes can tell that he's a generalist. But unlike most generalists, it's because he's a specialist in many things. Some generalists just aren't an expert in anything, so they speak in general terms. But you should consider, if you like futures and futures options, setting up an account with Daniel. Most places you don't get to talk to anybody either, and
That's
I
right.
know I miss that. So
yeah, that's the special thing of what we do for commodity producers. We work with speculators and any futures trader. But if you are looking to get more, take a deeper dive into commodities, want to understand the fundamentals behind some of these, we can build out entire risk portfolios around that. But that's the value of working with a full service broker, is that personal experience you get with them and the ability to build a strategy that makes sense for you. Some
all right,
guys that's more
average
speculative.
clearing costs for a trade.
Well, full service for our for clients that are looking for full-on commodity risk management, we charge around 25 or 1 penny, $25 a side. Otherwise, we have, for self-directed traders, we have discounted rates that get down and are price competitive at,
Right.
$2 to $5
well, you know what,
based
Daniel?
off of volume.
Those used to be discounted rates, $25.
Yep.
Okay,
It used to be.
and used to be. Okay. Anyway, so you get really full service at discount prices. So that's my pitch. I like Daniel. I think that he'll work hard for you, and appreciate you
Thanks for having
dropping
me,
by.
Dale.
Yeah.
Absolutely. Have a good one, everybody.
All right, Daniel. So I'll see you in June.
Sounds good. We'll get it on the schedule.
Yeah, well, I'll send you a date, and have a great quarter, my trading warrior brother.
You too, Dale. Have a good one, everybody. Thank you.
All right, Daniel Hussey Jr., find him on X under that name. And that's a wrap. Okay, I'm glad you liked it, Laura. I think you could buy grains and just hold them. Don't leverage them, just own them. All right, that's a wrap. Don't just count your bushels, count your blessings. And I'll see everyone tomorrow. You're very welcome, everyone. Get into the community. It's going to